Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at MP Materials.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So, let's get into the analysis.
Okay, so when we look at this company, I think the first thing to establish is that we're not talking about a traditional commodity miner here.
No, not at all. You're really looking at what you could call a national strategic asset.
Exactly. And the core story is defined by this. Well, this really drastic strategic shift they've made recently.
It's a huge shift.
And this is where it gets really interesting because they made a deliberate choice to just stop selling their product to their main customer.
Right, to pursue a completely different and hopefully higher margin business.
That deliberate choice is, it's absolutely essential to understanding their recent financials, right?
It is. Because if you just glance at the raw numbers, they look pretty concerning. The Q3 2025 results, for instance, showed revenue hitting, $31.6 million?
Which is a 50% drop year over year.
Exactly. For almost any other company, that would be a huge red flag.
Yeah.
But here, the nuance is everything.
So let's unpack that. Why would management make a call that immediately tanks their quarterly revenue like that?
Well, because they are sacrificing that short-term, lower margin revenue from selling the raw concentrate to China.
Okay.
They're pivoting. They're going all in on scaling up their own internal U.S.-based downstream processing.
So they're going from selling, for lack of a better word, dirt, to selling finished magnets.
That's the plan. And that requires them to hold on to their inventory and redirect their focus. It's a calculated cost of making that transition.
And that sacrifice, I guess it's only justifiable if their production capacity is actually, surging in the background.
It has to be. And if you look past that revenue dip, the operational volume tells the real story. In Q2 of 2025, they hit a record output of NdPr oxide.
Right, that was 597 metric tons.
And that was up 119% year over year. That's the number to watch.
That volume growth is so important. And for anyone who isn't familiar, NdPr is the shorthand for
Neodymium and praseodymium.
Right, which are the essential elements for making those super strong permanent magnets, the ones that power everything from, high efficiency EV motors to missile guidance systems.
Exactly. So that 119% growth isn't just a number. It's proof that they're the only scaled domestic source actively building this huge inventory for their own manufacturing.
And that inventory position really just highlights their big competitive advantage, which is the vertical integration.
They control the mountain pass ore body, which is, it's famous for being one of the highest quality rare earth deposits in the world.
And they handle everything from there, from the mining to the processing, all the way to finished magnets and even recycling.
Which positions them as the only truly scaled rare earth producer in the entire U.S. right now.
And their strategic future only reinforces that moat they're building. We have to talk about the upcoming heavy rare earth refinery.
The one planned for 2026. Yeah, that is a potential game changer.
Why is that such a big deal?
Well, for two reasons. First, heavy rare earths are often needed in defense applications, things where you need extreme heat resistance. And second, they are just much harder and more expensive to source than light rare earths like NdPr.
Okay, hold on. Why are heavy rare earths so much more critical and difficult to get than the lighter ones?
It's a great question. It really just comes down to geology and processing. Deposits with high concentrations of heavy rare earths are, they're rare outside of China and a few other spots.
And they're harder to process.
Much harder. They require different, very complex separation techniques that historically have been almost entirely monopolized. So if they successfully commission this heavy rare earth refinery,
they'd instantly become the only non-Chinese supplier.
In that absolutely critical segment, it's not just a commercial win at that point, it's geopolitical independence, all packaged into an investment thesis.
But if the goal is that kind of strategic dominance, they have to be spending a ton of money to build out this infrastructure. That sounds incredibly expensive.
It is extremely expensive, and that's why their financial foundation is so important to look at.
Okay.
What's fascinating here is that the market consensus seems to fully support this long-term strategy, even with the short-term revenue hit. Analysts are forecasting just explosive growth once those downstream facilities fully ramp up.
What kind of numbers are we talking about?
They're projecting revenue to go from around $204 million this year to $1.42 billion by 2029.
Wow.
And crucially, they expect earnings per share to turn positive by 2026. That marks that pivotal shift from spending money to making money.
So they have the projected revenue, but do they have the actual capital right now to get through this transition? I mean, refineries and magnet factories. That
Yeah.
costs billions.
They have flexibility. They're in a positive net cash position with about $468.8 million in cash and equivalents on the balance sheet.
So they have enough liquidity.
They do. Enough to support the R&D and the CapEx for the Fort Worth facility and the 2026 project without taking on a mountain of debt.
And that financial strength allows us to talk about the really exceptional level of external validation they've received. This is where the story gets pretty unique.
The DoD partnership.
Yeah, that's not just a contract.
Mm.
It feels like a structural transformation of the company's entire risk profile.
That's absolutely the right way to put it. The U.S. government effectively became their largest shareholder through a $400 million equity investment.
But the investment itself wasn't even the biggest part, was it?
No. The biggest structural change was the guaranteed price floor. The partnership provided a guaranteed floor of $110 per kilogram for their NdPr products.
A price floor. It sounds like the government is treating them less like a miner and more like a utility.
Exactly. It secures durable revenue visibility, and, this is the critical part, it insulates them from the wild swings in commodity prices that have plagued this sector for decades.
So it massively de-risks their transition.
It says, we need this supply, and we will guarantee you won't go bankrupt producing it domestically.
That government backing is huge, but it's not happening in a vacuum. It's also backed by some serious blue-chip commercial validation.
Absolutely. The commercial sector is just as important for getting to scale.
You look at the Apple commitment, for example.
Right. A $500 million procurement agreement, and it included a $200 million prepayment.
Which really validates their technology, not just in mining, but in recycling, too.
Yes, being part of that closed-loop system.
Right.
And then you have the General Motors agreement for 1,000 tons of annual magnet supply.
And these aren't just speculative deals. These are foundational, long-term pillars for demand, especially with the EV market accelerating.
Right.
And if we connect all this to the bigger picture, it looks like they're not just focused on the U.S. supply chain. They're thinking globally.
They certainly are. You just have to look at the recent announcement in November 2025 about the Saudi joint venture.
To develop a refinery there.
Exactly. It signals an expansion and a bit of geopolitical diversification,
Yeah.
placing them strategically outside of the direct U.S. versus China dynamic. It enhances their global resilience.
Okay, let's pivot now to the immediate drivers. What are the specific catalysts investors should be watching over the next few months?
Well, the major near-term event is the Q4 2025 earnings release. That's expected around the end of January or early February 2026.
And it won't just be about the numbers.
No, the management commentary will be crucial. We need to hear updated guidance on capital allocation and, most importantly, the specific production outlook as these new facilities start to come online.
But the real operational catalyst, the one that proves the whole transition strategy is working, that's tied to a specific time frame, isn't it?
Yes, that is the commissioning of the Fort Worth Independence Magnet Facility. That's expected by the end of 2025.
So very soon.
Very soon. And that is the moment of truth. That facility is what triggers the shift from being a raw material supplier to an integrated manufacturer.
Yeah.
It's what enables those direct high-margin sales to GM, Apple, and the DoD.
Until that facility is running successfully, the whole vertical integration model it's just a promise.
It's just a promise.
And beyond that operational news, we're also seeing some market-driven events that could affect volume, the institutional movements.
Right. You've got the ETF rebalancing event, potentially mid-January 2026, and then the institutional 13F filings around January 31st.
So for the average investor, why is watching those 13F filings so important? What are we really learning there?
That's a great question. The 13F show what the massive institutional funds, BlackRock, Vanguard, the big endowments, what they were holding at the end of the last quarter.
So it's a vote of confidence.
It's a huge vote of confidence. Seeing continued accumulation by these large, long-term players signals sustained institutional interest, which, retail investors do follow closely.
Okay, so while the outlook does seem pretty bullish, we have to talk about the risks. No transition of this size is risk-free. What are the big execution risks?
The primary one is just pure execution risk in scaling up. Building a new magnet facility, commissioning these complex separation processes, these are not plug-and-play operations.
So delays are a real possibility.
Delays, especially at Fort Worth, would immediately impact that high-margin revenue we've been projecting. It would push back that 2026 profitability target. Management just has to deliver on time and on budget.
And of course, we can't ignore the macro risks. Even with government price floors, they're still operating in the very volatile rare earth market.
Absolutely. The geopolitical exposure to U.S.-China trade policies is always there. While their position is protected, if global prices for rare earth plummet, the sentiment of the whole sector will still weigh on the stock. You can't fully eliminate that risk.
This brings up an interesting question.
Right.
What about the big, unconfirmed unknowns? There's always market chatter about potential partnerships that could dwarf what they already have.
There is significant speculation, yes. The rumor mill has been churning for a while about negotiations with a major EV producer.
Tesla.
Specifically Tesla, yes, for a supply chain partnership. And there's also chatter about accelerated DoD magnet purchases, maybe to build up the National Reserve faster than planned.
And if either of those rumors were to actually materialize,
I mean, they would be massive drivers. It would validate the technology at a much higher level almost instantly and would likely force the market to re-rate the company from a domestic supplier to a truly global dominant tech supplier.
but again, these are unconfirmed.
Completely unconfirmed. Investors should treat them as a potential upside, not as core parts of the thesis.
So to wrap this up, the investment thesis here. The core story is really one of strategic autonomy and deep vertical integration.
Reinforced by major government contracts and these blue-chip commercial deals.
Right, and that near-term challenge we saw in the Q3 revenue drop is mostly seen as a necessary cost of transition. It's a temporary dip to get to a much higher margin, strategically dominant position.
That's right. The pivotal factor shaping shareholder value through early 2026 will be the successful execution and ramp-up of that Fort Worth magnet facility. That progress is what fundamentally shifts the company from just a miner into a critical domestic manufacturer. That's the transition we're all watching.
Fascinating insight into a company betting big on strategic necessity. Thanks for walking us through that. If you found our talks useful, please remember to subscribe, like, and comment underneath to support our podcast. We'll be back tomorrow for another stock analysis and catalysts talk.